Hey everyone, Nick Shane here looking at SHAK. I don't remember doing a video for that stock, but I've had a few people ask me about it. They reported earnings, and let's look at the charts and see if we can figure out whether it was a good thing or a bad thing. So after hours, today is Monday, by the way, May 4th, and they reported after hours, and the headline I read was the stock was down 2% or whatever because they missed on sales, and the headline writers immediately come out and start putting one and one together, regardless of what it says. They would have said exactly the same thing if it had popped. So just whatever happened, whatever the headline is, whatever price action, link them together, boom, job done. Not so. Okay, so this is a relatively small company. We can all admit right now that the environment is pretty tough. These specialty stores like this, one-offs, it's not that it's one-off store like this one, and In and Out, for example, they have their following. So people will get to their burgers or whatever the food is, regardless of how long they need to wait in line. Starbucks in my neighborhood, the only two that are open are drive-through, and the line goes around the block more than one time. It's just insane to me, but hey, people want their coffee. In this case, people want their burgers. So to actually beat on earnings and miss on top, usually it's a no-no for a growth company like this one. This should be a growth stock. But look at the earnings reaction here and this one. And this one, if it's indeed 2% down, in fact, I checked after hours and it's now up 0.8%. So I haven't looked at the range. I guess I could while I'm talking to you. But the point is, don't listen to what the quote expert tell you, and just make your own your own opinion on the matter. Because during this time, there are no experts. Nobody knows what the heck is going to be in the stock market, or let alone in the environment. So okay, I see the flush down to 49 and change, immediately reversal above prior day low. So overnight, on Sunday night, they flashed 48 and change. They didn't even come close to it after hours. That's a good sign. I see a node somewhere around 51. I'm talking from a different chart, and now they're about 53 and change. They went as high as 55 and change. So they went through the whole range that I expect between here and here. Okay, so that's good. That's part of the message today. So forget the news. Let's see if we can work with the chart, because the news is whatever it is. Jobs report this week, maybe 25% unemployment, maybe 12. If it's 12, the markets are going to rally. If it's 25%, the markets are going to fall. So they're expecting about 15. It's a lot of fear, sentiment trading these days, headline trading. It's just overshoots this way or that way, even though most headlines don't matter. So let's find out the levels that do matter. In this case, I see, it sticks out to me that 48.50, 48.60 is definitely a level to pay attention to. Let's go ahead and draw this, and I'll speak to it for many reasons. So not every tick is equally as important. This tick is important. It was a high poke right here, and it was a low poke today. Today, 5.4 before the actual earnings. So clearly, the market pays attention. It was also close to this little tizzy here and this little doji here and some sort of a hammer there. So it is a level of contention. Let's zoom back out to see if it has been a level of contention before. Sure enough. In fact, I'm going to go 15 and go minus 50. Okay, you can see my point. The more left I go, oh my gosh. Okay, it's okay. We need minus 200 because apparently it's pretty important. So you see that? It has been important since 2018, January of 2018. Oh my gosh. Okay. So minus 1,000. Get it? All right, so there we go. It's been important for a long, long time. It's only fair to give it its importance now. Now, over here, it's more of a range, 45 and change, but we just talked about this, and I expect support. If tomorrow it opens red, it's a viable dip, in my opinion, based on the charts. Now, this involved the absolute worst case scenario where the world actually physically stopped working. So it can't get worse than that. What's worse than stop working is to be out of business. So they're not out of business. They just reported. They beat on earnings. So clearly they're doing something right with penny pinching. So the only thing that stands in the way is reopening. And we're starting to reopen. And I'm going to do this as well. I'm going to draw another line somewhere around here. Oh my gosh. Okay, so from here on out. Okay, check this out. So I connected this dot with this dot, and look what dot it touches back there. If you think about it, this is a wonky head and shoulders, right? It's like some sort of a blip here, huge head and some sort of a tiny little shoulder here, and then so if you measure this distance, it'll be a little bit bigger than this distance. So they may have already satisfied that. This all says that this tizzy may be over, and if it opens down tomorrow on Tuesday, it's a viable dip. The only caveat to this is if actually the stock market itself falls apart. There is a region of support below, and I say region because when the VIX is this high, there's no hard line in the sand. It's hard to make an argument for a hard line in the sand, although we did find a few here. So what would I trade it? I would chase this to where? Up to 75, with knowing that there's going to be a resistance along the way. I'll put 75 question marks, R's. So there's going to be resistances along the way. Mainly around 63-ish. I know I'm talking higher numbers, but I'm telling you after the breakout. I'm not saying it's headed straight there. So if it opens down, what would it have done? It would have drawn a cup and handle. Now I have to give a caveat here. I am not a technician. I have high respect for technicians. I have a lot of friends who are, but I do know my stuff in plain simple English. So they could be drawing a secondary smaller bowl than this guy, and in which case, if it comes back to here, it would trigger some buyers. Sorry, chat room's open. By the way, down below there's a link in the description to the chat room. Hit it. And I'll also put a link to, if somebody wants to learn all this stuff, one-on-one situation with Zoom or Skype, let me know. I don't have a lot of seats for that because it's one-on-one, but I can fit you in, I think. So above that would invite some buyers. Ideally, I'd want to see it test the neckline for footing in order to start finishing the job. How far do they run? Usually as deep as the bowl. And then if you've watched my videos before, I'll say I usually look left to see where they would find resistance. I see resistance here, so regardless of the target there, I think they'll fail here first. They'll fill the gap here and probably find some resistance, but first of all, they will probably not go through the gap right away. So tick to tick, fade, fade, maybe finish the job with a bigger fade. There is a gap all the way to here, which coincides probably with this eyeball there. So the whole world, the whole thing ties together. This is the whole correction. Eyeball about 50%, it's somewhere around here. See how it all comes around? Okay, so Fibonacci holds hands with the cup and handle folks, holds hands with somebody like me who eyeballs everything and gets it right most times. So this was the 50% at the mouth of the gap. So if it triggers here, I have to be mindful of these resistance zones. So this is how I look at a chart. As far as getting the bigger point of view, this is a weekly chart to give you the perspective all the way back there. And if I were a faster trader trading the action today, this was maybe on a 60-minute. We could have seen the action happen easier than on a higher time frame. Like, why would anybody go smaller than one-day charts? Because there's a completely set up different information. Depends on the time frame. Like up here, I would not have started buying it, knowing it was a pivot level. Down here, I would not have started selling it because of it was support before. I would have known that the open whoosh down below was a great opportunity. I wish I had seen this because it would have been a good scalp. Looking left, this was a prior bounce. And this is the head and shoulders that we kind of talked about. Similar to what we just talked about. Like a big head, tiny little shoulders, where it could have hit this. So again, fundamentally, suboptimal situation for it to be operating in during the COVID crash, and this is the worst they could do. Twice confirmed that they don't want anything lower than this. They report an earnings miss on the sales, which is a no-no for a growth stock. They manage their bottom line, so boom, they bounce. It looks like after hours they're running green. If tomorrow they fall lower, the plan is to buy the dip. If tomorrow they go above it, then the plan is to chase it as a breakout, knowing full well that I'm going to have to expect some resistance. So I would chase it accordingly with the proper tools. Nick signing out.